Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta, and the top buzzing story today is the crude oil prices. The OPEC decision that came in yesterday was a surprise because today is the OPEC and allies meeting, and the decision came in on Sunday that they have gone ahead and cut output by 1.16 million barrels per day. Well, the output cuts begin from the month of May and they go on until December 2023. uh, Almost everybody is trying to wrap their heads around on why would OPEC come out and make a decision a day ahead of the meeting, even as it was going to be a surprise output cut. This could have happened today as well, but I think it was all about the pleasure of markets opening gap up by nearly 7% on a Monday morning, and we still are trading 5.5% on the higher side, with an expectation that as the US markets open, you could be looking at some more movement there. Because the reason being, let me tell you, that there have been net shorts that we have seen in case of crude trade. So a lot of these were actually caught unaware. A 7% of a jump up is something that the markets perhaps clearly did not work itself with. So not only as you see the US open markets open, you will be looking at many of these shorts being covered. You perhaps are also looking at longs being created because, as I said, 100% of the market believed that there would be no output cut, and that's exactly what we saw coming in from OPEC. And at a time when the market was on a weekend, this meeting was supposed to be happening today, but that's exactly what we have seen right now. So just to tell you on sense of prices also, April has opened on a very firm note, 5 to 6% up already on the first working day in the month of April here. For the month of March, we saw the crude prices decline by 5%. It has been a 7% decline for the crude prices for the quarter gone by, and this has been a third straight quarter that the crude oil prices have been trading in negative. So when you look at that breakup of 1.16 million barrels per day, we have seen much of that weight being carried. There are no surprises here by Russia and by Saudi Arabia. UAE comes in from 128,000 barrels per day. You also have Iraq coming in with 200 barrels per day. And you also have Oman, Algeria, Kuwait being part of this as well. So all major producer countries are a part of this right now. So there are two questions that the street is asking. One, on why would OPEC cut output, and that too by a big margin. So with the overall output cut now, we stand at 3.7 million barrels per day of a cut, which is almost 3.7% of global demand. So that is what OPEC and allies have taken out. So the markets are preempting that, or OPEC perhaps preempted that that's exactly the kind of demand decline that you could be looking at. Well, we started the year with positive note that the China was reopening and that demand could be coming back, but the China reopen has been uneven. We haven't seen demand rebound with the kind of expectation that we started this year with. So is China demand going to increase, or is going to increase gradually, is something that perhaps OPEC and allies are looking at. The second thing is the banking crisis. Are we out of the woods yet? Are we still staring at a slower growth, a recession perhaps? If the OPEC is looking at all of those things, and that is the reason they have gone out with an output cut, then are we looking at a very strong jump up in case of crude oil prices? Is the second question that the markets are asking. The second quarter of the year also marks the summer driving season in US. The higher prices clearly do not augur well for them. So that's another reason that you have seen this knee-jerk reaction and very high crude oil prices. Various questions to be asked, but I'm assuming we will see answers to those as the months pass by. But at this point in time, it is going to be about the demand scenario, a big question mark on that. The Chinese demand is going to be a bigger one because the street expects that 40% of all incremental demand growth is to come in from China. And if we are looking at a slowdown there, then it's a question there. The other thing is about supply. The US supply is not so strong. OPEC and allies are cutting supplies. We also have seen 400,000 barrels per day of exports halted out of Turkey because of legal adversities there. So supply is a concern as well. So from where we stand right now, looking at the fundamentals, the crude oil prices definitely will look at some support. Majority of global banks and brokerages believe that the crude prices will trade between 80 to $90 a barrel. We might see a 70, we might see 100 as well, but it is going to be between 80 to $90 a barrel that the crude oil prices will continue to trade going forward. You have Goldman Sachs already talking about $95 of an average this year. You have JP Morgan and then Citi, Bank of America, all of them believing that the crude prices could be better performing in the second half of this year than what we've seen in the first quarter, perhaps. But at this point in time, as I said, this week definitely is looking at more support for crude prices.